Well, good afternoon. It is Friday afternoon. We just got through a bad storm yesterday. So hi, Melissa.
Hey.
So yeah, I know that the storm last night did a bunch of damage throughout the Metroplex, but nonetheless, we're here still by the grace of God. So
Might need help with some roofs, but
yeah, right. Maybe some people will have to refinance. Who knows? You know, there's a lot of people who have 100% equity in their home and don't have insurance. So
that's true, which I really think is a bad idea.
And these roofs are no joke. So maybe, some refinance chances out there. So yeah, let's get right into it. Let's talk about what is happening. I've seen nothing but great news about the economy, and job reports are amazing, but then we see mortgage rates continuing to go up. So let's talk about that. Why is this happening?
Okay, so it's happening because of all the good news. So that's what you said. The service industry reports came out this morning. They are good. The service industry is strong, meaning people are spending money on services as well as goods. And that is pushing up the demand, pushing up prices. The manufacturing numbers were good as well, which means that they are manufacturing more, which means there's going to be everybody's buying for the same parts, which means more pressure on the cost of the parts, which means cost of the finished goods will be increased, and that leads to inflation. So everything points to our economy's doing well. That means inflation's not going to come down quickly, and that most likely means that in the next. So everybody was kind of thinking, based on the last Fed meetings before all these economic announcements, that they'd probably do a 1/4 point increase in March and a 1/4 point increase at the next meeting. Now people are, because of how good these numbers have been, we're thinking they're probably going to do higher increases in all the way through June.
Wow.
They have to get a handle on inflation. And until that happens, mortgage rates, they haven't baked in more than a 1/4 point increase in the next 2 meetings. So if those increases are higher, that means our rates are going to quite likely be in the 7s for a conventional loan for the next few months. We're a little bit below that right now, but not too far below.
Crazy what just a few weeks does to interest rates here. And even crazier that great news about the economy brings higher interest rates. And it's interesting that, you're saying that, oh, now we're going to finally have all the goods that we need. Whereas over the last year and a half, it was hard to get stuff, and therefore prices were raising. So now that we're going to be able to get stuff, prices are still going to increase. So
exactly. I mean, the one thing that I still think is a factor that is not showing up in any of these numbers is the amount of debt reliance that consumers are relying on.
I heard that.
They are, it is requiring more credit usage to buy and do the things. So buy the goods, use the services. So eventually that probably there's a limit to how much credit somebody can have and it remain a good economic balance for them. So I think that's where the break is probably going to happen. People are just spending money they don't have, and eventually that will catch up to us as an economy.
Yeah, I was watching some report the other day, and they were saying that consumers are using well into the double digits of their credit, more than what they ever have before. So, it's unfortunate. Inflation, that's what happens, I guess.
And we can't do that forever.
Right.
So that might be part of what slows this down more so than the Federal Reserve's increases. I mean, those are also going to increase the cost of all borrowing. So credit card payments are going to be higher, significantly higher in some cases than people were used to. And any other variable interest rates, or if someone has to go get a new car loan, that is going to be more expensive. So budgets are going to be constrained, and at a certain point, we're going to have to turn.
Yeah, totally good. And there's so much uncertainty now as I talk to, as I'm prospecting and talking to clients and potential clients. everybody is saying the same thing. They just don't know what they ask me, my opinion. And, I only have opinion based on data and facts. And, I don't forecast like people do because I'm not capable of that. I don't have enough information. So yeah, the uncertainty is real. What's that?
Even the ones with information, their forecasts aren't always good.
And that's the other thing is like, it's a roller coaster ride that we're going through, because a few weeks ago, interest rates were below 6%, and now they're heading very close to 7%. And last week, everything was good. And this week, everything is bad. And I mean, it's just literally a roller coaster ride right now. Okay. So
Yeah.
tell me some good news. There has to be something good.
Well, there's, of course, I think we talked last week about the FHA change in mortgage insurance premium. So that's good.
Yeah.
We're releasing a new FHA, well, it's not new, but we're re-releasing our 100% FHA product. So that's a first lien and a 3.5% down payment, but that down payment is provided by a second lien. So borrower's contribution to the down payment is zero. They still have to pay for closing costs unless the seller will help them pay for closing costs.
And this is a Guild mortgage program.
Yes. So yeah, it's a program we offer, and there are other ones that offer it, but it just another way to help people who need that little extra boost to get into a home.
Yeah. And I've said this over and over again, here in the Dallas-Fort Worth area, our homes appreciate. I think only one time in the last 40 years have we depreciated for a year, and that was the 2008, and that was all mortgage driven. So homes here have leveled, the cost of the price of homes have leveled out for the last several months. We are seeing some homes with multiple offers. Buyers are out, more homes are coming on the market. So if you're thinking of selling, of course, right now is a great time before you have huge competition, and the same with buyers. So let's talk a little bit about buyers and the mortgage, and why do you think it's a good time for buyers to come out?
I think exactly what you said about home prices appreciating. And I think if somebody is comfortable with the payment that they would make at today's interest rate, they know exactly what that payment is going to be for the next 30 years, minus changes in taxes that of course can change, but they have that payment. They know they can qualify for it. Maybe it's not as comfortable as they wish it were, but they know they can qualify. Compared to rent, you're not building any equity, and you're paying 100% interest. It's just,
right.
And it can go up, and it usually does go up. I heard a story last night about a lady who would move every year to like, oh, I'm getting a special here. I get $200 off for the first 3 months. And then the next year she'd move again and again and again and again. And she talked about how, because once she was able to save enough money to get into a home and actually unpack all her boxes, like what an incredible relief that was. And I'm sure it was more than she was paying in rent for those apartments, but just the relief of knowing you have a home, you can put everything away. And you and your kids, if you have kids, or your dog has a place to run around. And those are things that are intangible. And if people are worried about the value dropping, I totally think they should look at a chart over the last 40 years, and it has consistently gone this way.
Yep, exactly.
Maybe it dips a little bit, but then it goes right back up. And if you're living in the house and you own the house, and you don't plan to sell the house during that dip meant nothing.
And the appreciation here in the North Texas area, especially North Dallas, is year after year between 4 and 6% appreciation. That's a huge amount of money. Yeah, and also I'm seeing like all-time high rent. So a 1-bedroom apartment up this way is knocking at $1,700, $2,000 a month, and you could get at least a $300,000 house for that money if you qualify for it. So yeah.
No, I think buying is a good long-term investment, and sure, the numbers are not probably going to be quite what you want them to be, and we wish rates were lower, but they're not. If you buy them, you can always refinance when they come down.
So we just talked a few minutes ago about a key indicator that basically your thinking, what makes you believe that now is also another reason why now is also a good time to buy? And that's because investors are coming out. They were like hiding under rocks for the last month, several months, and you're seeing a ton of investors now.
I am seeing investors buy, individual investors. So these are not the Black Rocks and Chase and the people buying entire subdivisions just to rent out. So it's not that. These are individual investors that feel confident about the market. And keep in mind, they're paying a higher interest rate than
Even than the consumer, the normal consumer,
another at least half a point higher. And then they're putting 25% down, but they're willing to risk that 25% down payment, assuming anyone thinks the market's going down, and they're willing to pay a higher interest rate to still buy that property, have someone live in it, pay the mortgage or at least part of the mortgage, maybe not even the entire amount of the mortgage, but they're betting that the value of that home is going to go up 4 to 6% per year.
Yeah.
And it is a good long-term investment.
Yeah. And again, I think it's because we have been watching the market for months now, and it has leveled out. So I think we've most likely hit the bottom of prices, and investors know that once we hit the bottom, it can only go up.
Yeah.
So that's probably, irregardless of the interest rate, they know they can refinance when rates go down, so yeah. Yeah. Okay. Any other things that we need to talk about this week?
Not really. I think the market's heating up. I'd say don't wait.
Yep. I agree. Don't wait to sell because you're just going to have more competition, and definitely don't wait to buy because you're going to have more competition. And you can refinance later, even though the interest rates are, close to 7% now, you can refinance later. But there's also other ways to get your interest rate down. And, that's where your lender comes in. Have good conversations with your lender, because there's so many tips and tricks that you guys can give to buyers. So you're not stuck at the 7%.
Exactly. That is, yes, not temporary buy downs, all kinds of other things.
Yeah. Good. Perfect. Okay. Well, Melissa, thank you so much. And we will talk again next week, and you have a great weekend. Enjoy the beautiful weather, and hopefully hopefully your roof gets fixed soon.
I'm confident it will.
Okay. Have a great weekend.
Thank you.
Bye.